Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, July 23rd. Great to be with you guys this morning. Hey, Gary, Jay, we got Kay in the house, Mike, Rohan, Aurelian. Great to see you guys this morning. So I hope you guys saw Jamie's piece yesterday on sentiment extremes. It's something we're going to be hearkening to a lot over the next couple of days. You know, we've made quite a stretch, a DXY lower, euro at resistance, sterling pressing the highs, gold with a breakout just shy of the 2011 highs. Now you have Aussie, Kiwi, will hit dollar yen, dollar peso as high popular demand there, dollar CAD, SPX, and I just want to take a look at dollar Swiss because we've been covering the levels on the intraday page. I haven't really been getting involved in it, but did make a nice break lower today. So any other questions or trade setups, as always, feel free to throw them on the message board at any time. Hey, Jay, good morning to you as well, sir. All right, so where shall we begin? Really quick, look at the DXY and where it stands now. Here's what it looked like on the 20th, earlier in the week. We were coming into a major support barrier. You guys remember 95.55, 95.61 is the level we talked about for quite some time. It's the 2019 low day close, the 200% extension or the measured move, that consolidation break that we made back here. Here's the buckle. Here's where we opened the week, plowed right through. Okay. This is the daily chart, so I'll show you the daily chart as it stood. That was the level we were watching. We plowed right through that. Okay, so you're at the November 2017 high, that's 95.15. We're trading below that now. The next level is simply the yearly low at 94.65. Now, I'm going to take a step back real quick and go to the weekly charts on this DXY. I just want to show you a couple things. There's a lot of pairs that are pushing extremes as far as consecutive candle count. So if we look, for example, of how many weeks, right? This is going to mark its fifth consecutive down week. We haven't seen that since back here. That was a 6-week decline. That was the low. You take back look even further. Last time we saw a 5-week decline was here. My point being, guys, is that we're reaching extremes on a couple of different facets, right? You're hitting extremes in that prices have stretched in a amazing, extraordinary way. You're seeing extremes in sentiment in that you're seeing all these headlines now. Again, just to reiterate, I love when Jamie posted these because they're so telling. And I can tell you back in time, guys, we can go back so many times, and you can go back in the archives on SB and check and see how many times we've seen a picture like this. Call the bottom in the dollar. Not necessarily that's saying what's going to happen here, but it is primed. We've had a pretty radical decline, 5 weeks down, dollars at the yearly lows. True, if we break and pivot below 95 today, which is the 2019 swing low, if we close the week below this, you're still looking lower. Any way you slice it, you're looking for a move on 93.92, 93.88. It's the next big confluence weekly support zone. But with the extreme in sentiment, the extremes that we're seeing in price, right? You take a look at this thing and the momentum signature is now at its lowest level since the 2018 lows, right? Look for tomorrow's close. It's absolutely imperative. If we close it south of 95, momentum closes south of 40, that would be a shift in momentum, a behavioral change in the profile we haven't seen since 2018. And with the price sub 95, would certainly keep the downside in the dollar. That said, the immediate downside starting to get a little wishy-washy here. Mike says, hey, good morning, Mike. Hope all is well, sir. Barron's article from the 20th says dollar is poised to crash. LOL. Tag Jamie in it. You guys open my eyes to these things. Honestly, amazing. Cheers, Mike. Great to see you back in the room. Extremes in sentiment, guys, it's something that we always love to hearken and bring up when they're at extremes. And when the market is when you see a headline with with a George Washington face busted up on the back of a 5-week decline to fresh yearly lows, that's not the time that you want to start operating on a bearish dollar perspective. I do think we've broken big support. I do think the bigger picture is lower, but at this point, the immediate decline definitely seems a little tired here. Again, here's the daily chart. Swing yearly low is just a little bit lower, 94.65, right? Never really got a monthly opening range. I mean, you could try to say that was your monthly range break, but it wasn't very long. And just a time of caution. We're back. We got below 30, and here we are testing 30's resistance. So major key resistance, 95.61 on the daily chart. Here's what it looks like on the intraday. I'm going to adjust some of these levels. Here's what it looked like again into the start of the week. So we've broken this level, and now this is resistance, 95.15. If we get through that, here's your next resistance targets. And bearish invalidation now drops to the objective weekly open. Geez, there we go. Must be Thursday. Okay, so here's the weekly open. I don't want to see anything surpass that if we're maintaining the downside stance. Okay, immediate resistance 95.55. I want to see what this is going to look 95.15. Excuse me. I want to see what this is going to look like right into the open of U.S. trade. You got divergence into the lows. We didn't really hit a support target. The yearly low is just lower, so I want to see what happens here in the U.S. trade session today. If we pop through into the open, I think you get a larger recovery. If this fails, former slope support, it should be resistance. You'd look for the extended move down towards 94.65, subsequent 94.27. Things to keep in mind. We're pretty quiet on data. Tomorrow you do get market manufacturing PMI flash. It's supposed to come in at 51.5. Remember, PMI, anything above 50 shows expansion, sub 50 is contraction. So we got a previous read of 49.8, expecting to see a print of 51.5 tomorrow. But more importantly, guys, over the next 7 days, heading into next week, you get some major market releases, namely out of the US. The biggest thing is going to be the Fed interest rate decision. Okay, and then heading into Thursday trade, you get the release of second quarter GDP. Guys, we're expecting a contraction of 32.6%. You didn't hear that wrong. That's right, 32.6% in the U.S. Second quarter GDP, quarter on quarter. So I think it's going to be a wake up call. Everyone's expecting a dismal number. That's really the height of the lockdown and the COVID impact. But all those things are looming next week, right? All those things are looming next week. So keep that in mind on any dollar positioning that you do take. Any questions on DXY? Immediate focus into the US Open is what happens here near 95.15. All right, so number 2, let's go over last night's update. Euro dollar looking pretty good. I'll be posting an update on this on Daily FX later today. Here's what it looks like last night. We've been following this one for some time. We noted a very interesting level. It's the basic 50% retracement, 1595, right? Just above that, you have 1621. And both of those converged on some near-term slopes. So this pitchfork is a newly added pitchfork we assessed yesterday. Within that pitchfork is this channel. I don't want to get things too confusing, but sometimes when both gradients are offering pivots, you kind of want to leave them both on the chart until we see a break of one. Long story short, here's what it looks like, guys. No change. Pretty clean. All right. Still think the long side immediately is at risk, sub 115, 116, 20s here. But near-term support. First, look at that slope. Okay, you're coming in about 1530s, I think is what I noted yesterday. Yeah, 1530s, okay? And then below that is the 115 handle, which is the 2019 high day close. Bullish inbound is 114.45 into 114.37. Don't want to see drop into here per se, but that's the area or zone that would invalidate the current uptrend. All right, so risk for some weakness. Ideal scenario, you see failure ahead of 115 or 114.45, one of these two choke points. Topside breach has you looking for 117.21 on the long side. Questions on euro dollar? If you're holding longs, watch this area into 116, okay? Just a good zone to kind of clean a little bit up, bring up your stops to break even or better, maybe take a little off the table. But I think the formation looks pretty clean here. All right, number 3 is sterling. Now, unlike euro, which completely just ripped through the highs, sterling's holding a major critical resistance level. Let me take you a step back here. Well, I didn't show you the euro weekly, by the way, guys. Here's the euro weekly chart. Just wanted to show you again. This one's also working on a 5-week ascent. Keep in mind here, we're also testing longer term. This is a pitchfork from 2015 and 2017, right? So many pivots along the gradients on the long side, along the lower parallel. Here's lower parallel, now resistance yet again. 50% retracement of the drop, slope resistance. Another reason why euro is definitely vulnerable. The long side, the advance is vulnerable well below this level near term. All right. So sterling looks like this. Here's the weekly chart. And I just wanted to highlight here another beautiful zone. No one should be surprised. We talked about 2717, 2754 last month on the ascent. We turned right ahead of it into the start of June trade. We ripped into it, turned off that level again. Here we are again. Now we have basic slope resistance off of last year's high and this year's March highs. Only a 2-point touch, but it converges right there on the 2019 open and the 618 retracement of the decline from the 2019 highs. Major, major critical pivot zone for sterling. Don't take my word for it. Look at that cursor to the left. Just look at the left. Pivot, 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 pivot on a closed basis, right? Keep going. Lows, resistance, support. Just a massive, massively important pivot zone in price, low tolerance area. Look for a reaction here this week. Okay, sterling on the daily chart looks like this. Within the confines of this pitchfork, we've been following from the May and July lows. Okay, there was the 25% parallel support once, twice. Didn't really make a tag last on that last drop. Here's the rally again. Key resistance 2710, 618 retracement, 2019 objective yearly open. Looks like we're getting run into a little problem here. All right, so for me, look, the immediate focus right now on pound is this zone. If we close below 2710 today, I do think you risk a larger pullback. If we somehow eke a close above, you still have to deal with 2840, but that's another 90 pips to the upside. And that's the 618 extension from the advance off the lows, a bigger level that we just missed back here in June. That converges on longer term slope, up slope resistance, the works, right? So first level of resistance, want to see support ahead of that 25% parallel, next upside target. Here's sterling on the intraday. All right, so looks pretty clean. Again, one of those trades where you don't want to hate. You don't want to hate. It's just been holding this formation. Again, this is just off the objective June lows. Really clean, right? Here we are, nudged up into this 2710, 2754 level. If we breach, that's the breakout level. This 2830, or 2840. That's really what you need to clear to really suggest that the broader downtrend has shifted here. But until we do, I still think that the advance may be a little vulnerable heading into this region. So look, ideal scenario in Mike Boutros' world, like a fairy tale, is that you see a topside breach here, you fail here for a larger pullback, and then we look to reassess and reposition there. But I would love to see a tag of 2816, 2840 if possible. It's just looking real tired. It's just looking real tired. So a little bit more patience required here on pound as we kind of nuzzle into this resistance zone, but the levels are clear. Bullish invalidation is going to be at the weekly open. 2557 break, that's what would shift the focus decisively lower. Okay, that's upslope support. Is the open of the week and basic objective level. Questions on pound? All right, Aussie looks like this. So sterling, no change to any of those levels from last night, guys. All right on point. Okay. I'm sorry, I skipped over gold. Let's hit gold. So here's what gold looked like yesterday. What can we say? Any gold traders out there? Is E-Man in the house, or any of my gold ladies? Here's the setup. Look, it's the same trade that we talked about early in the week. It's the same trade we talked about on Tuesday. The breakout is underway, right? We don't want to start trying to trade this on the short side or trying to fight this at all. If you're not already long, you are sheerly chasing any way you slice it up here. So it might be a little frustrating. Some of you might be a little frustrated. You missed this rally. Some of you might be trying to fight this rally, calling the highs. Just not prudent to do at this point. Look, we're going to take a step back. Here's gold in the weekly charts. The advance and the breakout, okay, above 1733, 1747 changed everything for us. This was our next major threshold that we talked about for weeks. It's the 88.6 of the decline from the record high, okay? But it's also just some basic slope. A 3-point touch there had us looking for a reaction there. And boy, did we get it. We broke from 1820, guys. We ran up another 70, 60 bucks into 1880. So look, levels to watch that we need to be mindful of right now, okay? The high close, the record high close in gold prices is 1881. We're testing that today. We need to see a daily close above that to maintain the long stance. And the next major level on the upside, yeah, 1900 is going to be a psychological barrier, but the actual swing high of 2011, 1920, can you believe we're there already? It's nuts. Nuts. So don't fight it. If you're holding longs, you want to bring, if you're holding longs, anything sub 1747, my humble opinion, I'd bring up that stop to 1820, lock in that profit. If you get anything sub 1820, I think you're in for a bigger washout, but a good zone definitely to be looking for a reaction. One other thing I would note on a weekly close basis tomorrow, guys, watch this momentum profile. Okay, so an objective break above 70 in and of itself typically is a long trigger for us, right? Here's the first break above 70 back into the start of the year. That was the start of a breakout above that 1526 level. Here's another break above 70 back in 2019. That was the breakout above the 1366, 1350 level. Prior to that, obviously, you're looking at the all-time record highs, but you get my point, right? So what's happening this week? Obviously, nothing matters until the weekly candle closes. This means nothing right now. But tomorrow, if we maintain stance above 1821 and maintain momentum profile above 70, that would be in and of itself, again, an objective trigger in momentum. On the flip side of that, if this thing pulls back over the next 48 hours and we close the week sub 70 momentum, and specifically sub 1856 here, which is the high we closed, but more importantly, 1821, again, that would be exhaustion written all over it. And that's where I would look to come in to maybe try to play a pullback. Barring that development, guys, not a prudent call to try to fight this yet, with a capital Y and a capital T, okay? Here's what it looks like on the daily chart. Now, we've been looking at this momentum, at this, ascending pitchfork formation. Again, there was 1856. There was the 1820 break we got earlier in the week, rather, but there's the 1826, 1856 and 1874, the 2011 high day close. Okay, if we go to the previous gold updates, remember, guys, the link is always provided for you, and it'll take you right to the article, where we are in that article. Here's the daily chart as it stood back on the 20th. Here's the high week close. Here's the 2011 high day close. We're testing that now. Okay, so as we said last night, watch for a reaction at that 1874. We're seeing that now. Here's what it looks like on the intraday chart. All things held constant. Okay, if I look at this objectively, forget everything that's happening in the world, and I'm just looking at price action. Break of resistance. If this holds right here, right now, you're looking for resumption. There's no reason to try to fight this. If this breaks, it could be a false break of upslope resistance on building divergence, right? And if we fail and pivot back below, you'd look for the setback, 1856, 1841. Don't really want to see anything beyond that. Bullish invalidation. Bullish invalidation. Strength surpassing these highs, and you're looking for a test of the record high. And guys, I do think we beat 1920. I think we get into the 2000s at some point, but we have to trade each level as it comes. Right now, 1920 is the next upside target if this holds. Any questions on gold? Now, I don't want to get into the, what can I say? I want to touch this very, Gary, you bring up exactly what I'm trying to say. My novice head is still telling me that the pros are waiting for gold to make a big pullback before they start a major rally in dollar yen. I'm with you on that. I don't want to correlate the two too strongly, Gary, but I do agree with you on this. Look, I'm trying to think of good discussions I've had with just my buddies across various desks in New York, but I hear a lot of this. Well, Mike, the coronavirus, is still going to be a market headwind. We are, getting reports that the vaccine is in development. The U.S. already yesterday pledged to buy 100 million, vaccines from Pfizer once they're made available. This is all good news, right? And you'll hear guys start to say, well, that should trim gold on the long side. That should curb the advance here. So Gary, I'm playing both sides. There are pros who are saying gold should see a pullback because the inherent threat the coronavirus is making is there, but this good news with vaccines and whatnot, and the markets reopening, should curb the appetite for everyone rushing into gold. The other side of that argument is one singular word, which is the one I'm more so leaning towards, and that's China. You're seeing tensions rise. You're seeing the consulate yesterday that got closed in Texas. Again, I'm not just like, pulling things out of the air. These are tensions that will really impact relations between the two countries, right? So China was burning papers and all these reports that they're, that consulate was a spy ring and all this, whatever, right? I don't care about any of that nonsense. But the point is, the relationship is souring, and that I think that China, not the trade deal per se, but the relation has the larger economic impact on markets. So my point being, Gary, the whole gold story behind why gold should or should not rally, there's arguments on both sides. There's arguments on both sides. From a price standpoint, if 1874 doesn't hold today, or we get a quick pullback, that would be screaming exhaustion. If we're able to maintain stance above this upslope resistance, we should be expecting acceleration, right? I take it right back to the basics of technicals and the basics of price action, try to filter out the noise. I'm, again, on both sides of those arguments, I see the merits, but I take it back to what's gonna, benefit our trading. At the end of the day, price action says we're testing a big level here. If we can't maintain above 1874, might be in for a little bit more of a pullback. Gary, does that make sense? Just to give you kind of an idea of how I'm thinking about the gold trade here. It's a breakout any way you slice it. It's just, can you continue to push this breakout or get into any new fresh long positioning at these levels? That's a tough call. Okay, so now that's gold. Let's jump back into Aussie, and that's number 5. Here is what Aussie looks like. And here's Aussie on the weekly chart, start top-down approach. So another trade, which just really impressive, man. I love when these reactive levels hold. You guys know for weeks, we've been talking about what? 70.16 to 70.42, last year's open, this year's open, objective levels, not Mike Boutro's opinion, not SB Trade Desk's opinion, not Jamie's opinion, fact. We caught that high in the advance last month into that high. We rebounded off former downslope resistance, now support, popped higher, First level of interest, 71.30. That's the 618, the entire 2018 drop. Next major up level is last year's high and 2017 lows, May low specifically. So look, this is your first level. We obviously surged through it. I'll show you the intraday chart in a minute. Actually came right off of upslope resistance, which is great. But what we need to focus, what we need to focus on here into the close of the week is 71.30. Where we close in relation to 71.30. Gary's saying it does. I'm just thinking the abomination will remain flattish until a big move in gold happens. Yeah, I have dollar yen on the list. We'll take a look at it. Man, that consolidation range just keeps contracting, right? Yeah, you're probably right on that. But we'll hit dollar yen in a moment. So Aussie, the focus, all I want you to do on this chart, guys, is look today, tomorrow on the Friday close, whether we close northbound or southbound of 71.30, a multi-year Fibonacci level. Critical. Daily chart for Aussie looks like this. So you guys remember this chart? Remember when we were breaking the channel support earlier in the month and I was like, what the heck is this, man? If this is a break of support, this should hold resistance and we should accelerate, right? What do we put our bullish inval as? The monthly open. Ever since the month opened, our bullish inval has been at 69. Haven't even tested it. We never even came close. The closest we got was 69.20. Here's the breach. First level 71.30. We're there now. Yesterday, we technically closed just above. Whoops. Okay, technically we closed just a hair above, but still the onus is on a push through that level, right? So what does that mean from here? Well, near-term support has to be at that key pivot that we were talking about all into the start of the month, right back at 70.16, 70.42. That's key near-term support and, in my humble opinion, bullish invalidation. Okay, could this be a pump fake? Sure. Yeah, I don't like these really far stretched out divergence references, but hey, a higher high and a lower high, we're breaking back below 70. Yeah, could be a risk for a little bit of a pullback. Let's see if near-term price action says the same. Stop traffic. What a turn. And here's what Aussie looked like last night. Or the night before, excuse me. All right, so there was that level at 71.30, 71.21 right here. Popped right through that on the initial test. We sat there as support, tagged the upper parallel, and we're right back at support, breaking that on a move for the median line. Okay, so back on the 21st, I told you 70.82. I would choke that up a little bit. You know, that is a former swing high that we're looking at. I won't go back that far, but it's former swing high. But watch this median line. It's been pretty decent. Resistance, resistance, a bit of a pivot there on both sides, but resistance, 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 break, acceleration. We're coming up on this zone right now. Watch what happens here. All things held constant, okay? The risk is for a little bit of an exhaustion pullback into this zone. A key pivot zone in price we've been looking at for years, right? Kind of like that area we were talking about with Euro. So that's what I'm looking at here with Aussie, okay? we don't have enough, you know, like a high-low high to really structure any type of formation yet for the decline. One thing I was looking at, we hadn't made this break, but I wanted to see, and now that we're making it, I just want to see a real quick reference of what 100 off the high would look. And if we do that, basically puts us right there right now. Actually, we broke through it already. Yep, too near term. Look for a reaction here. If that breaks 70.42, 70.16, bullish inval. I would want to see a low ahead of this region if this is going to hold this formation. Okay, and remember the extremes in sentiment that we talked about. Everyone's bearish dollar. Okay, so if there's a washout, if there's a cascade, okay, and it starts triggering some stops, dollar is going to rip. In fact, you know, we looked at DXY, right? If this is a false break of down slope support, this buckle back above 95.15 may actually be a larger recovery. So keep that in mind on some of these trades that are kind of stretched. Here's Kiwi, okay? Aussie testing slope support right here. Watch for reaction. Here's Kiwi, right? Didn't quite make it to its major resistance level, which was 67. That's the 2019 open. Quick look back at Kiwi before we get into the metrics here. A little bit different of a picture. And I want you guys to watch this closely today as well into the close. Different animal here. Aussie, okay, I'm gonna toggle back and forth. Aussie breaking to fresh yearly highs. Kiwi did not break to fresh yearly highs. Something called a non-confirmation high in related assets. Oftentimes indicative and oftentimes can warn of a market turn. Okay. Not only that, Aussie today is poised to mark an outside daily reversal off the highs. Took out yesterday's high. Yesterday's high was 66.89. Today's high 66.89.9. So it is technically a higher high. Covered yesterday's range, and we're trading below. Now, obviously, it's way ahead of the close, guys. I have no idea if this is going to actually materialize into outside reversal, but I'm giving you guys the indications of what you want to look for today, right? And if this does materialize into an outside day reversal, specifically if it goes back below 66.30, yeah, in my mind, that's exhaustion. Momentum running into 70, and then an outside reversal off of fresh multi-month highs and a non-confirmation high with Aussie, man, that screams exhaustion if it materializes today in the close. All right, so there's a lot of considerations to keep in mind here. And if you take a look at Kiwi on the intraday chart, here's what it looks like. Again, we didn't quite make it into that 2019 Open, but it's the same setup you're looking at with Aussie. We didn't quite come up off upslope resistance, but again, divergence into the highs, back at the median line. Again, a buckle below 66 would definitely put the pull back into play. Bullish in Val, same level, weekly open, 65.50. That's the level that would shift this back to the downside. Questions on Kiwi dollar? We're watching both of these very closely next week. You do have Australia inflation data back on the 29th. I think it's Wednesday. So keep an eye on that. All right. Burning through these. Okay, dollar yen, number 7. So Gary, here's what dollar yen looks like. Man, there is nothing to do here. If you're intraday trading this, it's a range. I hope you're enjoying it because you've gotten tons of back and forth. 107.40, excuse me, is the level we've been talking about for the last 2 weeks is resistance. That's still resistance. Now converges on consolidation resistance since the close of the week. 106.87 hasn't worked that well. Hasn't worked that well. We started stoking out that level back here. It was 100 off the high, a 618 off the low. My favorite Fibonacci confluences. You got a buckle below. We pop back above. We started looking at it again. You got a buckle below. We pop back above. We started to look at it again. Got a buckle below, pop back above. We're still in this consolidation, guys. Until it breaks, man. I mean, again, if you feel compelled to get involved here in this range, go ahead. Wouldn't want to be anything long above 107 until you clear 107.40. Wouldn't want to be anything short until you clear this consolidation support. On a longer term prospect, looking at dollar yen on the daily charts, there is, lack of conviction is just not really the right word. Like, what the heck is that? There's nothing exciting here, guys, to get involved in. And you guys know how I feel about dollar yen to begin with. As much as my definitive distaste for it, when the levels are there and the trade is there, I'm all over it. I don't give a damn. I just, we play around the abomination. Yeah, we call it names. But when the levels are there, we're there. They're not there right now. Here's the weekly chart. Your mid-range of the monthly trade range, of the weekly trade range. You're not near resistance. You're not near support. Momentum's at 50. Like, this is just as ugly as it gets. So Gary, I'm more inclined to think along the same lines as you. If we do take a more broader step back here and kind of take a look at the related correlations, yeah. Gold trading at resistance, major critical point on a major stretch, dollar yen consolidation, tight. Yeah, probably gonna see those break together. Dollar yen on the intraday, again, there's nothing really to write home about. Levels remain unchanged. So as per that report, you don't necessarily want to change any of the levels. It's just you want to get a little bit more of a breakout here before we start to get this thing moving. Here's dollar yen. So we scratched this pitchfork, right? We've now broken through it. We're just looking at the consolidation in red. It's funny because that ended up being the low. That was this right here. So we're still right into the weekly opening range, hasn't broken. Look for a break either below 106.70 or above 107.40 for guidance in dollar yen. It's been abominating since September. Love the terminology, Gary. Loving it. All right, peso number 8. Where are my peso traders? Man, this thing has been absolutely it's similar stance in the consolidation fake out break, but on a more objective look at this, look, the levels that we were talking about were right on point. At the end of the day, the breakdown in dollar peso was necessitated by a break below here. 22, 13.48 into 14.95. This is zone here. It's the objective monthly open. Excuse me. It's the 618 retracement. It's the range lows for the month. The objective monthly opening range. Well, we turned right ahead of it. So look, I don't know if this is a consolidation I want to focus on per se right here. You did see a pivot on both sides of that, but kind of just take it into the new low. Look for a breakout. Same thing as dollar yen, right? The one thing I would note here is that right now we're testing weekly open resistance, objective level. Again, not Mike Bush's opinion, not Jamie's opinion, fact, right? This is where we open the week, 22.54.18. You could see that pump into 2260s, right? Near that upper parallel. But for me, guys, I'm looking for the consolidation break. Okay, take a step back. Here's dollar peso on the daily chart, right? Really clean in that we're looking at a very basic range break. Here's that key support we just talked about, 22.15. Bottom end of that zone is like 22.03. Not really stressing that 2017 high, more so the 618.50 convergence here, which is the monthly range lows. This is the zone you need to get the next downside move, right? Other than that, we're simply in a contraction above support. So you're seeing a series of lower highs, but you're not necessarily seeing higher lows. It is a higher low, to be sure, but I don't want to call that more of a wedge pattern. I mean, more this is just a lateral consolidation over support. Look, at the end of the day, key near-term support at this point, I still have at 2281.79. That's 618 of the drop. Bearish inval is still up here. Still up here. Let me scratch that 100. It's got to be here. Why? Why is that so far off? Well, there's a couple of different things. Obviously, if you take into account slope, that 618 is more prominent in the now. This is the daily chart. But I'm mindful always of the monthly open. Okay, and the monthly open gives you 23, 22.97.70, and then that 38 higher. So like this slope for me is going to be the critical resistance zone. Breakout, resumption. Next downside target. Here's peso on the daily chart or on the intraday chart again. Any questions? Look for this consolidation break. My humble opinion, again, I'd like to see the downside break, but taking into account everything we just talked about in the webinar, guys, in the beginning, the sentiment extremes that we're seeing in dollar publications and financial publications regarding the dollar, the extremes that we're seeing in some of the dollar crosses that have made 4 or 5 week stretches into major resistance, taking a more holistic view is why my concern of a downside break here is a little bit more curbed here. You know what I mean? So look, I haven't taken anything on peso in a while. I'm going to wait for a break of this consolidation. Ideally, 22.13.50 is the break you need to get the next move lower. Till we do, let's look for a break of this consolidation. All right. Next up, dollar CAD, and then we got to hit SPX for sure. Here's Loonie. And here's what Loonie looked like earlier in the week. So it was the 20th was our last update on this. This is the formation that we were looking at. We're still trading in this formation. I want to show you a couple of things with this today that might alter your outlook a little bit. But the point being, let me walk you through this real quick. So here was the weekly open. We were looking for failure ahead of 36. We got it. First level, we were at 35.30s was that median line. Second level of key importance was 34.68, excuse me, to 34.86. And then right here, 34.32. Remember, I was talking to you about this, I believe it was Tuesday. I was telling you to watch for a reaction there. We got the drop. We got the test of resistance, former support. We got the break of 32.34. And what happened when that broke, guys? It's the exact thing we want to see. Acceleration. Accelerated lower, accelerated lower. I don't like that I didn't have a reference point where this turned. And here's the reversal. So what does that mean for dollar CAD? Is this spent? A couple things to note. First, near term, I do think it is. You're seeing obviously really strong divergence. They're both below 30, so it's not, I shouldn't say strong divergence, apparent divergence into the lows. My point being is this is the first test. 34.32 was paramount on the way down. I told you about it on Tuesday. The buckle, if this is a test, then this should fail. If it does, you're looking for a move on 33.23. If we pop back above the median line, you risk a move back into 34.80s, even 35. So for me, it's all about this pivot here now. So you start to look to yourself and say, well, all right, well, maybe the slope is off. Maybe that rebound off of the lows here was in fact slope, and we need to, tailor our analysis better. Recall that I made this parallel because when we drew this slope, it wasn't really offering support along the median line. A parallel off those lows looked like it was going to hold, but now it's getting messy. I'm just trying to walk you through the process I think through, guys. So I'm going to go ahead and scratch that. And earlier today, I was looking at something like this. Darn it. Right? Or even something like this. Now, I'm the first one to tell you I'm not a big fan of messing with your pitchforks and getting all, liberal with it, right? Just whatever high fits. I'm not a big fan of that. But sometimes just a tweak of the slope can give you a lot of guidance. And that simple tweak off of those highs, what did that do for us, right? What did that do to that? Well, it gave us a touch point on the resistance. It gave us a pivot along the median line and a test of that as resistance. And it caught the lows. So I'm more inclined to work with this slope at this point. So what does that mean? It just kicks out the levels that we're looking at, but it maintains the same stance. So you're still looking for resistance ahead of 34.90. A break lower, you're still looking for that tag of 33.23, but that kicks it out basically into the start of next week. And near term, it leaves a little bit more room for a tag of the median line before we start to invalidate any of the short side bias we've been working with. This is big. This is big, and this is the immediate focus for me on dollar CAD. I would love to see a hold below 34.32. That would keep the downside focus on 33.20 hands down. But if this pops, this is my near-term bearish inval. Anything north of 34.86, I don't want anything to do with it. All right, so that's what my take here on dollar CAD. Again, taking into account the conversation we had earlier, I'm going to keep harkening back. If the dollar recovers, we do see that exhaustion thrust, right, of all that bearish sentiment. You could see this start to rip a little bit higher than we expected, but all things held constant, that's the zones to look for on this recovery. Questions on Loonie? All right, number 10 and 11. Here's SPOOs. So the SPX obviously has been continuing higher. That same pitchfork that we highlighted earlier in the week. I never put it in a report, but it's here. Okay, here's that first level that we were talking about. So this was the level that we were talking about at the start of the week. Remember, we had that descending, flag formation, descending channel formation, whatever you want to call it. That break actually did prompt the rest of the recovery. So we took out that 88.6, which is right here. We pivoted along that a couple different times, and here we are. I don't have anything until 33.37. That's the next upside target in SPX for me. It doesn't mean that there's nothing to stop it. It's just, going back and looking at price action over and over again, I really I'm hard pressed to find a pivot point. You know what I mean? Now we can go back and price, and this is what I would use typically when we're looking at this on a scalp basis, right? For those of you who are kind of getting involved in here, intraday, you have a pivot here, right? Break, acceleration, turn ahead of resistance, break, acceleration, turn ahead of support, break, acceleration on the downside. That might be a decent level at the psychological 3,300 barrier, but the real level is 33.37. A really nice pivot. And that converges on slope. Near term upslope resistance, parallel support, taking off that high, that converges there. And it points to a little bit more of a higher thrust towards 33.37. Near term support, 32.58. Bullish inval right at the objective yearly open. I love it. 32.19. You have slope support there. You have the 100% extension there. You have former swing highs there. That's your bullish inval. So pretty impressive. Still pretty clean moves here on SPX. Questions? All right, last but not least, Swissy. I haven't given you an update on this since, well, it's been some time. I think the 14th was the last update. Yep, right here. So here's what Swissy looked like. I just wanted to show you how like ridiculous these slopes can be. This is what it looked like on the 14th, right? Almost 10 days ago. We're trading within this descending pitchfork formation. We were looking bearish sub 94.44. Now we did probe 94.44. Remember this? Not only did we break that pitchfork to the upside and clear that bearish invalidation level, but we turned right ahead of the July open. This slope you see here is a 38.2 of the pitchfork range. So again, taking Fibonacci considerations into account, a 38.2 measurement of that range literally guided the highs. I loved it. Loved it. Buckle back below the upper parallel puts you right back in play, right? 93.62, 93.36. Next downside levels here at the 88.6. We're just above that now. Ridiculous. Beautiful, beautiful, beautiful. And again, a pair that, it doesn't get a lot of fanfare, doesn't get a lot of attention, but when it makes the move, man, the levels are super clean. Bottom point, bottom line, bottom point. I can tell it's Thursday. Bottom line, big support for Swissy at 92.51, 92.64. Why is that such a big deal? Well, you got the low day close, which inherently in and of itself is going to be a level that we focus on. It's the yearly low day close, but you also have the basic 88.6 retracement and slope support over the next, basically into the close of trade today. Divergence into the lows, momentum on a daily standpoint hasn't broken 30, but you're there now. We haven't closed below it yet. So you're seeing that same exhaustion push, in Swissy. Not as apparent as you're seeing with the Euro, right, which made a much stronger reversal so far into the open, but you're getting the same type of move in that Swissy's coming in some pretty big levels on the downside. You're at risk into the low day close at 92.52 in my opinion. Questions on Swissy? A little bit of a sleeper sell here, but keep it on the menu, guys. Keep it on the menu. Big support, just lower. Rohan says, can we have a look at NASDAQ? Appreciate it. Yeah, I don't know if I have a NASDAQ chart. I don't think I do. So let's look it up. Hmm. All right, bear with me one moment. I'm going off the fly here. I don't have anything on NASDAQ. So let's see what we can derive here. Well, it certainly looks like you're at risk for a larger exhaustion pump here. Just looking at the momentum signature, right? Price action with a higher high, oscillator with a lower high, but that is actually your third reference divergence point, and one of the highs is above 70 and one of them is below. Those typically are strong triggers. Add that to the fact that you have a support trigger in momentum right here, and that's what will shift the focus lower for me if we break in NASDAQ. I do believe a lot of these trades, guys, you're going to see an exhaustion pump soon. Don't take my word for it, just my humble opinion. You're at, highs we haven't seen before, so it's going to be hard to ascertain level targets on the upside beyond this, but um, that's where really all your focus should be on near-term slope. Yeah, I think this is primed for an exhaustion break lower. Look, the monthly open converges on that slope right here. That's your key support. I wish I had a gradient that was a little bit more fitting. Something like that, right? So as you're going in this rally, you make a high, low, high, low. You take those two reference points. The third one holds. So that gives you 3 points, confirms the slope. After that reference points, that's when we would attach this parallel. So moving forward from this point, which confirms 3 points, you come here, monthly open, you drop below, but you never closed, so that maintains it. This looks like a false break to me. Support, 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 support. Instant, near term, immediate support into 10,619. Top side break, I'd be looking for that slope somewhere near 11,420. Now you have no justification of knowing that this is a high or putting any type of retracement on it, but just to give you an indication of how I would look to play this Rohan, if we do break below that slope, you take a quick retracement here, and the basic 38.2 opens up 93.70. That's a big decline. But if you bring up the 236, comes in just ahead of the weekly, again, gives you key support down here. He says, thanks, sorry to put you on the spot. Rohan, never say that, man. That's what you pay me for. I love to review levels and setups I'm not necessarily looking at, so never apologize, man. I'm here for you. He says, I'm short from the recent high. What target? So Rohan, I can't give you targets, right? I can't tell you what to do precisely. I can tell you what I'm looking for. What I'm looking for, if I was holding a short off these highs, would be a move into slope support. That's somewhere around 10,600, let's call it 680s, just to be safe. 10,680s. Look for a reaction there. On an objective level to kind of define the move, the low close is right here at 10,545. That would be sort of my near-term bullish inval. More key support and critical bullish invalidation, let's call it, would be this zone here. Basic 236 of that range. This month's open down here. First support target or key support target on the immediate advance, I'd put here. Does that make sense? Levels to keep in mind here. He says, yep, thanks. Right on, Rohan. Right on. And questions are always welcome, buddy. Never hold back. Just because I don't have a setup on it doesn't mean there's not a setup there. And that's what I love about working with you guys in general. It's so fun because we look at all these different setups, and sometimes you guys will throw out a pair that I haven't even considered, and kind of work off each other's synergy. It's great. So Nasdaq, very similar to SPX in that we're kind of pumping higher, but we're getting into regions of which the advance is looking a little exhausted. Okay, any other questions or trade setups? Feel free to throw them on the message board. Otherwise, we'll go ahead and wrap it up here. Watch the close. Again, we're pretty light on data, but next week is huge with FOMC interest rate decision and the US GDP figures on tap. So keep that in mind. Oh, Pete, I'm sorry, I didn't see your question. For extremes like NASDAQ, is now, can you look at the fib extensions for a possible exhaustion point? Glad he asked about NASDAQ. Let me go back to that. It depends how granular you want to get, Pete. I'm hard pressed. The whole thing with extensions, Pete, is you're looking for a conviction low, high, low, or high, low, high. Uh, I don't have any, I don't like when these advances are singular and one traded. You don't really have a clear cut wave pattern to try to ascertain where your reference points should be. Man, I mean, on a near term front, what I would be focused on would be something like this. Here's your monthly open from June. You test monthly open support, but you probe a new low. So that would be the onset of a new advance. Something like this would be what I'm looking at. You've already flown through the targets, which is the problem there, but the 1618 comes in just higher. So like if you're looking for lateral reference points of which you might want to consider on the long side, Pete, 11,242 would be a level to look for. It kind of takes you ahead of slope, but you might fail there. I don't like the structure, Pete. I don't like the structure near term, which is why I'm not really there's not something for me here per se. One thing I would want to consider is if this is failing or we are seeing exhaustion, something like this is basically what you would want to see hold. Man. Yeah, you're pulling straws here. There's nothing for me here. On face value, it's consolidation. You know what I mean? Look for consolidation. Typically, these types of things breach higher, in which case you'd be looking for that daily target that we looked at, that next that 1618. But you get the picture. Key support, I'm still going to be looking at that. Pete says, we work with retracements, and why wouldn't extensions work in a similar fashion? Thanks for everything. Yeah, Pete, don't get me wrong, man. I'm big on extensions and retracements, my main tool of use outside of slope, but extensions specifically require some conviction in a high-low high or a low-high-low. You need some conviction in the wave count. Otherwise, you're just taking random highs and lows and connecting them. And we'd never want to do that with extensions because you'll start chasing levels that don't really have any technical significance. So that's the only reason on this specific setup, I don't have a clear, okay, here's the reference points I'd want to use. Here's the high, low, high. Like I said, on face value, looking at near-term price action, that's the only thing that kind of stands out to me. It's just the nature of this advance that doesn't have me turned on to it, but definitely a tool that we work with very heavily. All right, guys, wrap it up here. Best of luck trading to the close of the week. Hope you guys have an awesome weekend. I will see you on Monday morning on Daily Effects for the free session and right back here on SB on Tuesday and Thursday. Best of luck trading, guys. See you on Monday. Cheers.